Countdown closer says, stay bullish on one name. Joining us now, ERShares founder, CIO, and CEO Joel Shulman. What is that name, Joel?
Well, Nvidia is a strong company in this market. There are a lot of companies that have some pricing pressure. What's interesting with Nvidia, they came out and they had an interesting perspective in terms of the marketplace, because right after earnings, they came out, the market was down 10% after hours, and then the next day they popped for 6%, and then the following day, and then after that. And what these markets have demonstrated is there's no place to hide. I mean, we're seeing companies like Walmart and Target, these staples that for 25, 30 years are completely flat, and then they spiked the last 2-3 years. They were behaving like a growth stock. Now, what we're seeing is that companies like Nvidia, on a price adjusted for growth basis, was a bargain. It was 1/3, all right, 1/3 the level of Walmart and Target. So for the growth and the market cap size, and by the way, they're able to expand the margins, which is highly unusual for a 500 or 400 plus million dollar company, 400 plus billion dollar market cap company, to expand the margins by 3% by reducing SG&A. That's a real accomplishment in this market.
Yeah, and it's tough for this market, at least from a headline risk standpoint. We got about 20 seconds left. How do you think next week moves after a day like today?
Well, what we've seen with tech is that the market caps have dropped quite a bit, 70, 80%, sometimes more. And yet the revenues are rising. We're seeing companies like yesterday, MongoDB and others, that are going up. Bill.com increased 300% in the last 2 years. So the market caps are dropping. The revenues are rising. So the market cap to revenue ratios, which were out of kilter about 6 months ago, are actually much better today. I think the markets are going up for the rest of this year.
All right. Okay. Joel Shulman, great to have you. That will do it for us.